We are live. All right. Welcome everyone to today's session. Awesome. Uh, if you can hear me, drop a comment in the chat box. If you can hear me, drop a comment in the chat box. All right. If you can hear me, drop a comment in the chat box. If you can hear me, drop a comment in the chat box. Awesome. Okay, so today we'll be talking about technical analysis using price action. All right, and my name remains Tunmise Olaoluwa. Now, here is a quick disclaimer: leverage trading involves risk. Trade responsibly. Regional restriction applies. Check out our terms and condition. For educational, this webinar is for educational purpose only and not a financial advice. Past performance is not indicative of future results. Okay, yeah, I can see Pfizer, I can see Amal. Awesome, good to have you guys on board. So here's a quick about me. My name is Tunmise Olaoluwa. I have 7 years experience trading and also with a background in finance and quantitative research. My trading results have been consistently profitable across various strategies. I frequently trade price action, momentum, trends, candlestick patterns, primarily focused on Euro USD, USD JPY, and GBP USD. Okay, so today's agenda, we're going to be discussing top to bottom approach. We'll review Euro USD currency pair. We'll review price movement of Euro USD. We'll also review any currency suggested by the audience, and I'm super glad to walk you guys through this journey. Now, organizational issues. This session is going to last for 45 minutes, and please use the YouTube live chat to ask questions during the webinar, and I will periodically check to answer all of them. Now, what does this strategy consist of? This strategy consists of analyzing historical price movement using candlestick formations, chart patterns, and market structure. Now, what kind of trader is it suitable for? It's suitable for position traders, intraday traders, and swing traders. Now, when to use it? You can use it during the high frequency, high liquidity period. You can use it within time frames of 1 hour to 1 month. Now, let's have a deep dive into our live session. Okay, so we are looking into the Euro USD market. Let's take this down. All right, thank you. All right, let me take off this. Good. So this is the Euro USD market. Let's go down. We are doing a top to bottom approach. Okay, we are using a top to bottom approach. Okay, someone said, Faisal said, bro, are you gonna share analysis on gold today? All right, so I would look into gold after Euro USD. Now let's go down to let's go down to the daily time frame. Okay, now we can see the price movement on the daily time frame. Now let's understand the current market structure. Okay, let's understand the current market structure. Good. So we come here, we're marking out levels of supports and levels of resistance. Okay. Good. Now, so you can see that we've been able to understand the market structure, where the market is coming from, where it's most likely going to. All right. Now, when we look at this now, we can see that, price has been ranging between this resistance and this support zone. Okay. Now, from the look of things, where did you think price is going next? From how price has been moving, price came this direction, okay, touched the support zone here, all right. Then from here, price went this way, okay. From there, price went this way, all right, and touched the resistance level. Okay, and then after touching the resistance level, price came down again, touched the support zone here. Now from the support zone, we can see that price has also picked up again and heading to touch the next resistance zone. Now, two things can happen here, right? One, price can get to this resistance zone. Okay, price can get to this, let me take this off. Price can get to this resistance zone, okay, and break out to the upside. All right, can get here, price can get here to this resistance zone and break out to the upside. Price can also, from here, touch this level and then reverse back. Take another U-turn. So, what we might most likely be able to foresee is price movement from this level upward. We might not be able to see price movement from here downward. Okay? Now, so there's a higher probability that price is going to move like this. Okay? Good. So, what are we going to do? Seeing that there's a higher likelihood that price would move upward. Okay? Now, this is the higher time frame, which is the daily time frame. Now, we are going to go lower to the 4 hours time frame to better capture what price is doing at a closer range. So when we go to the 4 hours time frame, okay, good. Now we can see how price has come down to this level. Okay. Now we are looking at how price is going up. Now if you look closely here, you can see that price is closing at a higher creating an let me say a higher high, okay, and moving upwards. All right. Now the chances are that price from this level would keep going up from here, and then we would see price go up to this level. All right. Now we want to take this trade. We need to have at the back of our mind that we have to factor in support and resistance. Okay, we have to factor in support and resistance. So let's do this. So this level here is our next our key resistance level, and this level here is our key support level. Now let's look at other support and resistance zones within the line. So we can see one resistance zone here, another resistance zone here, okay, then another, this is a support zone. Okay, now if we expect that there's a higher probability that price would move up from this level upward, okay, we want to have this level 1.17579 as our first take profit level, all right, and the next as our second take profit level. Okay, good. Then this level below it would be this level here, or this level here would be our stop loss level. Okay, so we want to make sure that we are inside risking 1%. We are willing to risk to lose 1% of our capital to gain 2% of our capital. All right. Now, because that is what we plan to do, anything we are looking at, any trade we are looking at taking, our take profit must be twice the level of our stop loss. So we're going to take this trade. This trade is a buy trade, so we're going to take this trade. All right. So I've entered a buy. Okay. Now I'll come to my order page. I can see my transaction, direction buy, volume lot size 0.03. Okay. Now take profit levels need to be set. Stop loss level also needs to be set. Now we said I want to put my take profit here and my stop loss almost close to it. So I'm going to take profit, taking it up. Okay. And my stop loss, I'm going to put it here. Okay, good. So you can see that the stop loss is almost 1% and take profit is twice the stop loss. Okay, take profit is twice the stop. All right. Can you hear me? Okay, let me know if you can hear me in the chat box. Okay? Let me know if you can hear me in the chat box. All right. Sorry for the glitch. Okay, so here is a trade already taken on gold and on Euro USD. Okay. Okay, so good. Now, yeah, I'm back. I'm back. All right, Pfizer, I'm back. All right, if you have any question, please drop it in the chat box. Okay, somebody is asking, what if I don't trade with a stop loss? All right, now it's important that you trade with a stop loss. You know why? Because you are not in control of the market. All right, you are not in control of the market. If you are in control of the market, then you can trade with stop loss. But since you are not in control of the market, trade with a stop loss. If you are in control of the market, then you can trade with a stop loss. But you are not in control of the market. You can't determine the market's next move. You don't know the mind of the market. Okay, so no matter how accurate your analysis seems to be, always leave allowance for the fact that the market can turn around against your trade, against your decision anytime. Okay, anytime the market can turn around against your trade and decision. So always trade with a stop loss in mind. That is rule number one. Okay, and we're even going to look into that, further in my presentation. Okay, good. If you have any question, drop it in the chat box. We've done two analyses. We've looked at the Euro USD market. We've also looked at the gold market. All right, so if you have any question, drop it in the chat box. Chukudi, or what your name? I don't know if I've answered your question. Okay, I want to believe I've answered your question. Pfizer, do you have any question before we proceed? He said, brother, what's the outlook for gold today and tomorrow before the Fed decision and after the 0 point? Yes, okay, good that you understand it now, Chooks. Okay, now looking at the anticipating the Fed rate, it's simple, if the Fed, cuts down rates, then we might see a volatile market. All right, so if you don't trade the news, I would advise you stay away from the news. Okay, so but if you trade the news, then maybe you want to trade after the news is out or before the news is out. All right, so if the Fed increases interest rate, then it would impact the gold market, because if interest rate is being increased, okay, the fixed income market becomes more attractive. So there would be a lot of investors selling their gold in order to lock in on the high interest rate. But if the Fed cuts down interest rate, all right, is going to you will see the gold market spike to the upside. All right, because now investors will look to take away their money from the fixed income market where the interest rate is low to another market where the returns they can hedge against inflation, and they can also make some decent money. All right, so if the Fed cuts rates tomorrow, the gold market would go up. If the Fed increases interest rates tomorrow, the gold market will go down. All right, so this might happen in a very short while before markets now get stable again, and and gets balanced again. All right. I don't know if I'm clear, Pfizer. Is that clear? So if the Fed cuts down rates, we would see a bullish gold market. If the Fed increases rates, we would see a bearish gold market. But this might happen in a very short period of time. You know how news are very volatile. I don't know if that's clear, Pfizer. Is that clear? All right. So now let's follow through this presentation I'm about to walk you through. Now, risk management. I like that someone asked this question when he said, "What if I don't use stop loss?" And that is why this conversation on interest risk management becomes very, very paramount. All right. Now, one, for risk management, if you are a total newbie in the space, I would advise that you start with a demo account. Practice trading with virtual money to understand the market and your strategy without risking real capital. 2. Use a stop loss order. Always set a stop loss to limit potential losses on every trade. 3. Trade with a risk to reward ratio. Aim for a minimum of 1:2. Like I explained earlier, you are willing to risk 1% to gain 2%. All right. So this is very, very important. A 1 to 2 risk to reward ratio, it means that you aim to gain at least twice of what you are risking. All right. Good. Now I think Pfizer, that's from your end. Okay, that's from your end. So you might want to check your internet. So 4, risk only a small percentage per trade. So which means you want to limit your risk to 1 to 2% of your trading account per trade to prevent significant losses. All right, good. Now 5, you want to diversify your trade. Avoid putting all your capital in a single trade or currency pair to spread your risk. Now, so what this means is that don't take, say you are using 0.3 lot size on your account and you pick it on a single trade. No. Why don't you spread it and say, okay, you take 1 lot size on this currency, 0.01 lot size on one currency and 0.01 lot size on another currency. Okay? Now, avoid over leveraging. Avoid over leveraging. Use leverage cautiously. Excessive leverage can amplify losses. Excessive leverage can what? Can amplify losses.